Niteen Dharmawat is here with us to talk more on markets. Niteen, of course, is an old hand in the market and is a co-founder of Aurum Capital. Niteen, afternoon. Thanks so much for your time. What do you make of the market? We were pinning our hopes to this US CPI data that if there is marginal improvement, probably the worst of inflation has already happened, but that doesn't seem to be the case. Do you think today the downside has opened up once again?
Good afternoon, Ajay. Yeah, so you rightly said that the inflation numbers in the US were a little worrying, but I think we are very close to the bottom of the inflation numbers that we are witnessing now. There will be some hard stand taken by the US Fed. However, as we discussed last time also, the macros have limited scope. We have seen earlier also between 2002 to 2008, the interest rates were going up. It went up from almost 1% to 5.5%. While in USA I'm talking about, and while the US market Dow Jones had gone up and seen huge rally, variety of factors are there. So we'll have to understand that there are three different cycles in the market cycle, the business cycle, and economic cycle, and they can all work differently. While our common sense is that they should converge and they should go together, while it doesn't happen in the reality that way. So market can behave differently. Let's wait for that and let's see how the opportunities are emerging for value investors like us.
Good point you made, Nitin, because also at the same time, however bad things might look on the macro front, micros are looking quite okay. M&M wants to set up a tractor plant now, the first one in 10 years. Siemens in its analyst meet is saying that order book backlog is very strong from both private and public. So it appears that the business cycle is getting to a higher kind of a growth groove in India now. Would you agree to that hypothesis?
101%, absolutely. That is what we are also witnessing when we are talking to the companies or attending the con calls. We could see the growth momentum is still maintained in those companies, whether it is domestic or export. And there are certain sectors which are really doing well. So we need to be a little more focused towards the micros rather than macros, and also to be very focused on industry or towards the specific companies. That will give us better return rather than worried too much about the headline inflation numbers or the interest rates which are happening. That's part and parcel of the life. I think inflation may also come down. We have also already seen that metal prices have corrected worldwide, including in India. We could see crude also coming down. It has inched up towards 120. Today it is marginally down. It's 1 or 2 days. We should not be too much worried about it. But the overall trend is, I still believe that crude should come down. And once it comes down, everything will be forgotten.
True. You're so right. In fact, some people are saying that despite red hot inflation reading in the next 6 months, because agri-produce prices globally have come down, back home in India included, wheat, tomatoes, everything has come down 15-20%, and so does have other commodities. Except crude, nothing else is actually at the previous peak high. What is the sense you're getting from one of the bastions of strength, which is domestic flows? Be it PMS, be it mutual funds, they were really supporting the market so far. Do you think their confidence could get shaken in this kind of a fall now?
Very difficult to predict that. However, when I see and talk to retail investors, the kind of the maturity that is being displayed by the retail investors is really has to be appreciated. They are not looking at it from the falls which are happening, rather than they are looking at it more from building wealth for themselves or their next generations. That is what I hear from many of them who are continuing this SIP. Maybe in last 2-3 years last 1 year they might not have done reasonably well, but over last 2-3 years they have done quite well, and they are looking at it from continuing purpose for next couple of years. So that's a heartening thing. So if that continues from the retail investors, I think it's a good news for the entire market.
Investor confidence I'd like you to hear a small piece which we spoke to the new management of RBL Bank, and then we'll discuss thing there. No. We'll just discuss the scenario there. Get you a slice of the chat we had with the new management there.
The market need not be nervous because the perception about the earlier one, it should be aligned with the person who is the heading, who has a track record. And I feel humbly present that I will be in a position to gel well with the team, and we as a team will be able to carry forward. The team remains intact, their strength remains intact, their capability is well known. Yeah, I will be working as a catalyst, not as a disruptive. Few of the strengths very, very clearly. Number one, that net NPA has dropped drastically, which is now hardly comparable to the rest of the industry. And we have the balance sheet is well capitalized, providing enough cushion for the growth. Third one is that they have a PCR, which is a coverage is somewhere around 70 plus, without even taking technical write-off. If you add technical write-off, another 10 percentage point is getting added, which in my view is a very strong position as far as the bank's books are concerned.
Niteen, what are your thoughts on the way management change happened, and despite of the new management saying investors need not be nervous, but clearly the street is more than nervous. I mean, there was not even a single attempt of the recovery. The stock was down 20% locked. Any thoughts there, not on this bank, but the way overall things are shaping up over here?
Recommendation on RBL Bank as such, Ajay. However, my personal view is that whenever you are in confusion, stay away at least till we have some clarity about it. Because if there is a smoke, we need to see if there is a fire as well. The things are not going all right for the company. So let's wait for some more time before it gets stabilized, and before and after that we decide. Should not immediately conclude based on just the management change which has happened right now.
Sure, I get your point. All right, let's move on and talk about, do you see our own RBI also turning more hawkish now that the data is not really that great in US, and probably there will be another hike by FOMC in 2 days, because our own RBI was a bit behind the curve as according to some, as far as the rate cycle is concerned.
See, what we believe is that we are close to 5% now at interest rate, and we may go up to 6.5%. So that kind of interest rate cycle it could go. And if you want to reduce inflation, then your interest rate should come near or more than the inflation rate. So I think it should come close to 6.5%, and market should be discounting now that. However, if it goes worse, if inflation goes worse from here, then there can be some concern. Though I do not feel that, personally, I do not feel that it will worsen. Things may improve if there is a worldwide, say it's not an India problem, it's a global problem right now. So if it is a global problem, then it's a good news for us because everybody will be worried about it, and there will be a growth pressure around the globe. If there is a global pressure on the growth, then the rates of variety of commodities will come down, and that will happen, and that will be a good thing for a growing country like India.
Right. All right, Niteen, we'll let you go on that one. Thanks so much for your time. That was Niteen Dharmawat,